I'm just going to go through a little bit of a summary in terms of this bank reconciliation. I've developed two questions. The other one is from the study guide. The other one is actually from the TAD 102. And then we will questions together just to see if you guys are actually comfortable with what I brought up. And then we're now going to move on to the second segment, which is your T accounts for the trade receivables and the payables. Right, it's learning unit 8, which is cash and cash equivalents. That's your bank, that's the bank account basically, or the bank statement. So we're going to look at the bank reconciliation. I'm sorry for my error typing. Bank reconciliation statement. We're going to look at why is it necessary to reconcile the bank statement. We first have to ensure the correspondence of the book of the first entry for the business and the bank statements. So they should actually correspond in terms of the books or the first entry along with the bank statement. So usually what appears on the CRJ and the CPJ should be a reflection of the the bank statement. All right. So why is it necessary? It has been, or the bank account has been seen as an extension of the bank statement. So the credit figures in the bank statement forms part of the CRJ, and the debit figures in the bank statements form part of the CPJ. So when you reconcile, you check those kind of amounts on the debit side, and then you're going to compare that under your CPJ figures that are given to you, and then you're going to match them. Whatever that is actually missing, it means that it has to be reconciled. Okay. So the same principle would apply when you do the credit side figures. So you're going to look at the CRJ, looking at the credit side, and then you match by ticking whatever that is actually corresponding together. And then obviously whatever that is missing, it means that it has to be adjusted. Right, and then you've got a favorable account balance, which is shown on the debit side of the bank account, and then favorable will be shown on the credit side of the bank account. Favorable bank balance is on the credit side of the bank statement, while the unfavorable is actually on the debit side of the bank statement. So there are quite a number of things that you need in order for you to understand what the bank reconciliation is. So the first one, it will be the credit figures and the debit figures on your bank statement. And the second one, it will be the unfavorable or the favorable bank balance. And the third part, you're just going to look at certain items that does not appear in the bank statement, but they do appear in the CRJ, and then where do you record them, or CPJ, or certain items that they do appear under the cash book analysis, but they do not appear under your bank statement or the bank reconciliation statement. And how do you actually record that? I think I gave you a little bit of a theory under this bank reconciliation. Let me just go further down there. It says that please again note the following: items not appearing in the bank statement but in the cash journals, they may be entered in the CRJ or CPJ, and items in the cash journals but not in the bank statement must be recorded in the bank reconciliation statement. The first two line items are very important. You just need to know what is actually going on, because they're going to give you the items that they do appear in the cash journals but not in their CRJ or whatever, or in the bank statement that is to be recorded under the bank reconciliation statement. So items which can either affect the bank statement or the cash journals, and then we also have the errors made by the business, so the bank errors made by the bank must be corrected in the bank reconciliation statements, and errors made by the business must be corrected in the cash journals. Items in the previous bank reconciliation statement but not in the bank statements, we are also going to look at that, and then we're going to look at the checks issued in the previous period but still outstanding in the current period. If the checks are older than 6 months, they must be entered in the bank reconciliation statement as RD check. All right. If a check is older than 6 months, it must be written back in the cash receipts journal as a stale check. So sometimes I would give you a bit of a transaction there where it says that we have received the check for that have stayed for 6 months, stuff like that. So in mind, you just need to know that that check is actually representing a stale check because it's older than 6 months. So the RD check simply means that it has to be referred back to the drawer, because it means that they paid you while they've got an insufficient balance in their bank account. So you need to bear in mind that the deposit are shown as debit entries in the bank account in the general ledger, but as credit entries in the bank statement. And then the payments are shown as credit entries in the bank account in the general ledger, but as the debit entries in the bank statement. Okay, so that's in a nutshell with regards to our theory under the bank reconciliation statements.
Okay, the difference between the bank statement and the, like, whatever that you get on your bank statement, let's say the amount on the credit side and on the debit side, whatever that you get on the statement is the opposite that you're gonna get on your cash journal. Is that what you're saying?
No. What I'm saying is you should remember, usually they will give you what's called an incomplete cash analysis or cash book analysis, right? Or they will give you the bank statement and the incomplete cash receipts and cash payments journal. So, but what I'm saying is the debit figures, they should be compared with the balances in the incomplete cash payment journal. And the credit figures, they should be compared with the balances in the CRJ. I think you would see that when we do the questions.
Okay.
Yeah, so if it doesn't match, for example, it somehow has to be reconciled. Am I making sense?
You will
eventually. Yeah, there are four
okay.
things that you are actually going to deal with. It's a cash receipts journal, it's a cash payments journal, and then you're going to balance your bank account, and then you're going to do the bank reconciliation statements.
Okay.
Yes.
Okay.
So initially, you'd know that figures in the debit balance of the bank statement should be compared with the figures in the CPJ, and the figures in the credit balance under the bank statement should be compared with the figures in the CRJ.
Okay.
And then I think with the question you will see whatever that we are missing when we do the comparison. Then what are we doing? What are we doing with them?
Okay.
Okay. Right, let's look at what happens before. We've got the bank statement for December 2022. We've got the debit and the credit balance and the balance. Remember, the balance is either it shows that you've got a deficit or you've got the available balance. So if it's a minus, in reality, that means that you owe the bank. There's a bit of an overdraft there, but if it's a positive, it means that you've got an available balance in your account. All right, we've got the figures in the debit balance. As you all know, they have to be compared with the figures in the CPJ. And we've got the figures on your credit, which has to be compared with the figures in the CRJ. And then we've got the balances figures. So the balances figure, usually you just say your credit, you add if there's a, if there's a continuous figures under your credit, and then you minus the debit, and then you get the balance and stuff like that up until the month comes to an end. Right. And secondly, we've got the cash receipts journal, which is quite incomplete. So we've got the different types of amounts, 1, 2, 3, 4, 5. The amount can reflect 5 different figures. And you've got the CPJ, cash payments journal. You've got the check number there and the amounts. And you have an additional information which says that Pooty Limited has reconciled the CRJ and the CPJ in the bank statement balance on the 30th of November, and the following outstanding were discovered. Check 228, 162, check number 333, and the deposit of 700 Rand. So the additional information further says that the bank account balance in the trial balance on the 30th of November 2022 was 18,530 as favorable. Remember, I just gave you an overview, a little bit of a summary on the theory in terms of the favorable and the unfavorable. So the last one says that the transfers on the 30th of November, December 2022 to the current bank account was for the interest on an investment. All right, let's do what we can do best now. The first one, we are given the cash. Okay, we are given the bank statement, which is here, and we are given the cash receipts journal. So let's do what we have to do now. What we're going to do now is we're going to compare these figures under the cash receipts journal to the credit side of the credit side of the bank statement. Okay. So our opening balance is 13420, and then we had a deposit of 700 rand. That's where we are going to start matching, basically. Let's go and have a look at, do we have 700 rand here under the CRJ? Is there any? We don't have that, right? So let's see now. We've got, do we have 320?
Yeah,
320 is there. Let's go and look at 547. Do you have 547?
yes.
You can see the 547 is here. And then we have the 510.
Yes.
510 is there, right? Okay, do you have the 484?
Yes.
Do you have the 25?
No.
Do you have the 1.2?
No.
All right, no stress. Then let's go to the payment side, which reflects on the debit. Starting out there, do we have 250? We go down under the CPJ.
Yes.
Do we have 250?
Yes.
Do we have 250 on the CPJ?
No.
We don't have.
No.
Do we have 216? Let's go there. I'm just going to scroll down, back and forth. 216, we do, right? We do have that.
Yeah.
Do you agree?
Yes.
It seems like I'm losing you guys. Okay. Do we have 294? Let me just go back. Do we have 294? Yes, we do have 294. Can you all see that? Do you have 740?
Yes.
Yes.
740. There we go. Do you have 80? Let's go and have a look at 80 up there. He's 80. Okay. And do we have 628?
Yes.
What? We have 153?
Nope.
153? I don't think we do.
No.
Do we have 278? Let's have a look at, we've got 278 is here. 340, we do have 340.
228, we do have it.
Right, and then do we have 48? Let's go and check 48. We don't have 48, right?
No, we don't.
Okay, do you have 12?
Nope.
No, we don't have 12. So my question to you is, what is your approach when you see this kind of a question?
So what I would do is what in the textbook, pick whatever is matching and circle what is missing from the relevant books.
Okay, shall we do that, or can we just, all right.
Well, you're on Excel, so I guess we're going to have to highlight on Excel.
Okay, that's fine. Let's go to the CRJ. Okay, under the CRJ, we have identified that 1.2 and 253, they're not there, right?
Correct.
And what else? Did we have 700? No,
yes,
right? Did we have 700?
700. No.
I don't think so. All right, it's fine. Jessica, which color would you like us to use for highlighting this?
What are we going to highlight? The missing amounts?
Yeah, let's highlight the missing amounts.
Well, let's highlight it in yellow since it's there already.
Okay. Okay, then I can go for 1.2. It's a missing amount as well, right?
Yeah.
Okay, cool. Then in here, I can actually highlight Dorothy. Is it fine?
Yes, because that's also missing.
Cool. All right, now that's fine. All right, let's go to the CPJ. We've identified that 48 and 12, they're not there, right? We'll look at the others. Can I use a different color or the same color?
I think maybe a different color because that's CPJ. Or the same.
Not the same.
No, the same is fine, I guess.
All right, no problem. So 12 is here. Okay, and what else did we miss? Let's go to the CPJ. Did we have 58 and 340?
In that 58 we don't have, yeah, we don't have it up there.
We don't have.
We have 340, but we don't have 58.
Right. So you're fine here, right?
Yes.
Okay, cool. Before I go on with Jessica, Mpo, are you following, my dear?
Yes, I am.
All right, no problem. Mr. Khachane, are you with us, sir? Okay, no problem. Is there anything that we have to highlight here? Shall we recheck?
Yes, let us recheck.
Okay, let's just recheck. We're going to start up there 216 and 294. Let's have a 216 and 294. 216 is here, right?
Yeah,
294 is here, right?
yes.
Okay, cool. Let's go 740 and 80. Let's go quickly.
The
740 and
250
80 there, right?
Yes.
Okay.
740, 80, yes.
628
Okay.
and 153, 628 and 153, 628, 153. I don't see 153 here.
Yeah, 153 is not there.
Okay, let me
And
just
250.
and 250.
Yeah, the 250 is not in the CPJ.
Okay. Hmm. 250 is not in the CPJ, and it's well highlighted in yellow. Okay, let's see. We were at 15. Okay, 278, 340. So like 278 and 340.
They both there.
They there, and 58 we've identified not being there, right? Everybody happy?
P.
Okay. We've used the Jessica's method. She says that she highlight whatever that is actually not matching or missing. And what's your next step, Jessica?
Then I would actually prepare the CRJ or the CPJ. Check what
Okay.
was missing.
For what was okay? Can I put the total amounts, the new total amounts, like this? Okay, the plan is, Jessica, I just don't want to kill your plan. But the plan is, I'm going to add all these figures here and then I'm going to put it here as the total.
Okay.
Is it okay? Because I'm now actually doing the solution. Is it okay?
Okay. Perfect.
All right. Okay, let's see. Please calculate with me so that I don't miss out the figures. I've got 320, I've got 547, I've got 510, I've got 484, I've got 253. So the total incomplete amount, it's 2114. That's what I have. I don't know if you guys have got the same amount.
That's correct.
Is it correct?
Yes.
Okay, thank you very much. Hold on, my spreadsheet is not being friendly with me. All right, and Jessica, what do we do? I'm going to come to you just now, and Moti. Bishop.
Can you broke the putty?
Okay, what do we do? What's the way forward from here?
Okay, you've added the CRJ, so maybe we should add the total of the CPJs as well.
Okay. Total amounts. Cool. All right, let's add them together. Let me go here. But did you all get 22114 there under your CRJ total?
Yes.
All right, 216, 294, 740, 80, 628, 153, 278, 340, plus 58. I've got 2787. Is that all what you got?
I have that too, yes.
All right. And Mpo, are you having the same amount? Are we losing?
Just. No. I'm here. I'm sorry for that. I'm using my cell phone and the laptop at the same time because I do have a problem with connection. Okay, the total amount I got 2787.
Okay, no problem.
That's
and
correct.
Okay, thank you very much. So, Jessica, what's the next step from here?
I don't know. Do we enter this amounts into the CRJ yet? The missing amounts?
Yes, if it does miss, according to your understanding, then obviously we have to make that kind of an adjustment. Jessica, you there?
I'm here.
Okay. All right. What do I do? What do I do from here?
Are we going to check if there's from the additional information, what else was supposed to be in there to be added?
Okay, let's have a look at the additional information. We've got Putti Limited has reconciled the CRJ and CPJ, and the bank statement balance on the 30th of November 2022 had the following outstanding, and the following outstanding were discovered. Check number 228162, check number 333. Check number 333 is 250, and then we've got a deposit of 700 rand. Okay,
So
let's have a look at this check number 228. Let's have a look at check number 228 if it is there, right?
Yes.
Can you all see it? I'm actually under the CPJ incomplete balance.
I don't
check
see
number
it.
228.
No, I don't see
It's
it.
not there. Okay. Check number 333.
Not there either.
Not there yet. Okay, an amount of 700 rands.
Nope.
The deposit of 700 rands.
It's not in there.
Okay.
No.
All right. If you go to the bank statement, I've highlighted 700 rand in yellow.
Yes, there's it in the bank statement.
Can
But
you
it's
see
not
that?
in the CRJ. Yes.
It's not in the CRJ.
Yes.
All right. So what do we do?
We're going to enter that into the CRJ.
Okay, CRJ is actually the first one on the right. So what do you put as? Is it direct deposit or what? Can I say direct deposit?
Yes, direct deposit.
Okay. Okay, direct deposits. And it's 700 rands, right?
Yes.
Okay.
That's correct.
Jessica. Okay, and then what do we do?
And then
But
now
can I-
the 250. Yeah.
Can I write the bank reconciliation statement in the meantime?
Yes.
Okay. Okay, bank reconciliation statement. Okay, it's fine. You said CRJ with you 700 rand. All right, and what do we do again here, Jessica?
Amount that we have in the CRJ, but not the cash journal. I mean, not the bank statement. That needs to go to the bank recon.
Okay, can I do the bank recon?
Yebo.
Okay. Let me just go further down. Okay, bank recon. What do we do here under the bank reconciliation? All right, basically the check out standing checks. Okay. Number. Check number what?
228.
228. And check number 333. Right?
333. Yebo.
Okay. Is there any other check again? Are you sure?
No.
Okay. And what else are we putting?
Let's see what is not in the CPJ.
Okay, let's see.
Something that was in the CPJ, but not the bank statement. CPJ, those two, there we go.
Should I go to CPJ or bank statement?
The CPJ, because this is what we need to put in the bank recon from the CPJ that's missing, isn't?
Yeah, we've got the creditor here, Sibanda,
Yeah.
check number 120.
Yeah, well, 153 and 58.
Okay, so check 120 and check 899. Make sense?
Yes.
Check 120 and 899, right? Please give me the figure, Jessica. Oh, let me just go back quickly.
Yeah.
Okay, 120 is 153 and 899 is
58.
58. Okay, 153 and 58. Let's see. 153 and 58. Okay, let's go up. Good. 162 and 250, right?
Yes. For 228 and 332.
162 and
250.
is it 280?
250.
250, sorry. Okay, so it looks like with the, remember I'm just following your instructions, right? So I've got a solution that I'll show you afterwards. What else are we putting?
Did we put the amounts in the CRJ? That was not in the bank statement.
Yeah, we had 700. I remember we had 700 at some point.
But I don't think it's in the bank recon.
Okay, we had a direct deposit of 700 under the CRJ.
Oh, okay. Yeah, CRJ.
Okay, and then the CPJ.
But wait. Is it not if the amount is in the cash channel, but it's not in the bank statement, we need to put it into the bank recon?
Yes.
So can we just scroll up to the CRJ? Because weren't the amounts missing from the bank statement?
253.
253, yeah. That amount was not in the bank statement.
Yes.
So must that not go to the bank recon?
It should go to the bank reconciliation statement. Or it is under the CRJ, so it has to go under the bank reconciliation statement. Can I say credit outstanding deposit of 253? I'm just trying to advise you.
Yes.
Can I do that?
Please do.
Under the bank recon, where is the bank recon? Okay. Extending deposit. You guys 253, right?
That's correct.
Okay, so 253. Okay, so what else? Remember, we've got, can I take the bank charges and I'm just going to give you a bit of an advice here. Remember, we've got insufficient funds. I think it should go to the CPJ of 48 rands, and then we've got the bank charges of 12 rands. Keep that in mind for me. I'm just going to type it and put it there. Insufficient check. What's that amount?
48.
48. And bank charges?
12 rand.
12 rand. Okay, is there anything that you think is missing? Otherwise, we have to close it. We have to close it down. Okay, we've got 2787 plus 48 plus 12. So I've got 24. That's the total 2847.
Yes.
Okay, so let me just put it bold, black. Yeah. Then let's come to CRJ. It's somewhere here. What's missing here?
Mr. Putti, there's no more sound if you're talking.
Oh, can you hear me now?
Yes.
Is it better? Okay, cool. Thank you. Thank you for letting me. Okay, let's read further here. What are they saying?
Bank.
Okay, 250 has been done, 162 has been done, 700 has been done. So, but we've got another additional information where it says the bank account balance and the trial balance on this. Okay, that's fine. The transfer on the 30th of November 2022 to the current bank account was for the interest on investment. So you've got an interest on investment for 1,200 Rand. It has been transferred through to the bank account of Putin Limited. So what you're going to do, it's an interest on investments, the amount of 4.2, right? Then you're closing it off. I'm very much concerned about this figure. I don't think it's relevant for this. Your Jessica, there's 700. Can we just bring it back up to speed and see if Bo, are you there?
Yes, I'm here.
Can we look at the CRJ again to see what was missing there?
Okay, I'll do that. Mr. Kakane, please come to the sound, sir.
He said he did put a note there to say that his mic is not working.
Oh, no problem. Sorry, I didn't see that note in it, but I had Kathy saying that there's something that he put it on. Okay. Can we have 13,530 on the debit side of the bank account? It's actually there. Can we have that? All right. According to the solution, I'm just going to go to the due to time. I'm just going to go to the solution. It looks like our cash payment journal is fine. 2847. Let's have a look. I think I do remember or recall this kind of a thing. Can you all see that? It means that we closed it off correctly. Where we went wrong was actually with the deposit of the 700 rands.
Okay.
I think I've complained about it before. Right, so the data transfer of 1,200 Rand is fine. However, we need to take this one out. We need to take this one out. Okay. The direct deposit of 700. But let's see what are they doing about it, because I think something must be done about it, which I think is going to go through to the bank reconciliation statement. It's not there either. Okay, let me tell you why it's actually not in any other box. Because it's here. It's in the bank statement, and it's also under your additional information. It means that we have to cancel.
Oh, okay.
Okay, so putting it there, it means that it's actually a bit of a double counting on it. Okay. So that's actually not supposed to. What we're supposed to do, we're just supposed to say 2114 plus 1,200, right? And then we get the total of 3314. But our CPJ and CRJ has been totaled up quite correctly. So what's going to happen is you open up what's called the bank account. Okay, I'm just going to open it up here. It's a bank account, and you'd say opening balance. Remember, this is, I'm just going to write it down, but it's more like a T account. Opening balance is on the debit side. So I'm just going to say debit, opening balance. Okay, and then you're going to debit what? The receipt again, right?
Yes.
Okay, we'll say total receipt. And you're going to say credit.
Total payments, yes.
Total payments, yes. Thank you very much. So our how much is the opening balance here? We go to the bank statement, right? Usually they will give you, you just have to know the amount, the last balance on the bank statement. So it should be 14,117. Do we agree?
Yes.
Okay. Opening balance would be 14,000. Okay, where are you? Right. 14,117. Sorry, I think I made a mistake. I'm supposed to say 14,117. And the total receipts, how much is the total receipts? We've got 3314, right?
3314, yeah.
Okay. Total payments?
2847.
Total payments is 2847, right?
Yeah.
Okay, so that's actually a credit. So what you would do, you will say 14117 plus 3314, and then you, my Excel is not that good. I'm scared of putting the brackets because it might show me a different figure. Guide you through, say 14117 plus 3314 plus 2847. So you've got a, okay, my apologies. It's 14117. No, we minus the CPJ, sorry.
Yeah.
So we've got a total of 17,431 for this two.
And then you minus 2847.
And then we minus this one.
14,584.
How much you get it?
14,584.
14,584, right? So that's going to be your balance carried out. So it's going to, because the debit is greater than the credit, so you're going to have the balance carried out. The amount is 14,584. So with that said, or with that being said, it means that we are going to have a total. So total on both sides should be 17,431. That's how you close it off. And then you would say the open, remember, you need to do the opening balance in October. Is it November here? Are we dealing with which month are we dealing? November. So the next one is going to be December, right? December is going to be the next month. So you don't do October, sorry. In December. And you're going to balance it off with the amount. Let's see. So that means this is going to be an opening balance in December. But this would be a total. This would be a balance carried down. It's going to be on the debit side. Okay. So basically what you do, say debit, then you bring it from the credit side, because the balance carried down is actually different in the credit side. Am I making sense? Am I making sense?
I just want to know, I think I got a little bit lost about where did we get the 17,431? Is that the total of everything there?
Yes, not the
17,431 that you put there.
Yeah, it is actually, no. The 17,431 is from 14,117 plus 3314. If you add them together, that's your total receipts plus the opening balance.
Okay.
And then when you deduct the total payments, you would have a balance carried down of 14,584. That's going to be your opening balance in December.
Okay.
Makes sense.
Thank you, Mr. Puti. Yes.
Okay, cool. Paul, are you there? Let me call him Paul. Good.
I'm here, Puti.
Are you following?
Yes, but you're too quick. Yeah.
Sorry, was I too quick? Okay, guys, let me just do this.
Yeah, you are too quick.
All right, no, don't sorry about that. Let me just do this. I'm going to delete this all together. And I'll show you guys on how this thing works. Okay. All right, I'm going to start this whole thing all over again, all together. Okay, you're going to have the bank account. Right.
Okay, sorry, Puti, before you continue, my yes. Challenge is when you're working on the spreadsheet, I'm struggling to follow because sometimes when you scroll up to your bank statement and then down to your CPR or CPJ, I get lost there, like when you put the amounts. So is there, like this example that you're busy with, is it somewhere in the book or what, so that I can be able to follow?
No, I get you. It is in the tutorial letter. I'll give
Okay.
you it says that I'm now in Limpopo. I left my type 102 in Pretoria. So, but I can send you that information because I'm back tomorrow.
Okay.
So I will tell you in the class as to on which page it is because we're having a class tomorrow. Okay.
Okay.
All right. Anyway, but let's take this as your T accounts for the bank account. So what you're going to do is you'd say balance brought down on the debit side. Can you see that? Balance brought down, and then you're going to have what's called the total receipts. Actually, I'm trying to bring you Paul up to speed, and then you're going to have total payments. Okay, and then sharp. Let's come to these and see how much is our right. Total receipts is 3314, right? And 2847. 3314. Okay, let's see. 3314. And total payments is 2847. And the opening balance, I think it was 14,117, like this. Okay. All right. So what we're going to do now is we're going to say the total receipts, which is 14,117 plus 3314, and you've got 17,431. So that's your total, 17,431. And then you bring this one here as well, 14,731. So we're now going to look for what's called the balance carry down, meaning that the difference of the total, of the debit minus your credit. So you're going to say 17,441, and then you're going to say minus 2847, and then you're going to have 14,584. So this is basically your total. Okay, these are your totals. And then what you're going to do is remember the bank account we're dealing with November now. Then we're going to look at how much will be the opening for next year. That will be, for the next month. That will be the December. So what you'll do is you'll say balance brought down, the balance brought down, and you will say December 2022, and the amount is 14,584.
Mr. Buti, the balance on the credit side of our bank account is incorrect there. I think you swapped the digits around.
Okay. Which one? Is it 14,000 that is incorrect? 14,000.
Yes, is it not supposed to be 17,4? No. The total, when you balance it, is it not also supposed to be 17 like the debit side?
Oh, sorry. I get
You see.
No, 17,431. Right?
Yeah, boy, that's the one.
Makes sense. Okay, cool. All right, let me quickly go back and check my balance statement if it does reflect 14,117. I think I missed out on that. Okay, bank statement is here. All right, that's got the right amount. Okay, but I was just trying to show you on how you're going to do your bank account. Everybody happy here?
Happy.
All right, that's great. Okay, cool. Then let's have a look at the bank reconciliation statement. Okay, I think due to time, I'm just going to give you or show you on how the solutions look like. So you've got the credit balance at the bank statement. Can you see that? Look at where I went wrong. Can you all see that I went wrong where? So this whole thing is actually incorrect.
Where?
We can't have this. I think under the additional information, we've got an opening balance. You guys do not rectify me. So the balance brought down is 13,530. Let's go and have a look at the additional information and see what it is. Can you all see it? It's in red. It's a favorable.
And the favorable balance.
So that means we have to rectify. That is 13,530 here.
Where are we rectifying this?
The opening balance.
Okay.
Yeah. So you'd say 3314 here. Come on. 3314. And it's 13,530, right? Then you take this thing out. Then obviously your total here is going to be incorrect because we use the incorrect figure, actually. So what we have to do is 13530, and then you plus 3314. I've got 16844.
Then that will give us 16,844, yeah.
Yes, 16,844. Thank you very much. So you'd say 8,000 minus 2,847. Then you've got 13,997. Yes, yeah. That's how you're going to change it. And you have to come here 13,997. Then that's how you close it. But let's have a look at how the bank requirement has been structured. Bank
so
account
Mr.
is
Putti, can I ask? Because yes. In our bank statement, yet was showing the balance as 14,117. But because in the notes they told us that it actually should be 13,530, that is the amount we're using from the notes, not what is actually in the statement. Because we correct.
That's very correct.
Okay.
Yes.
Okay.
Right. So I think I used that amount by an error. Okay. So the 14,117, you can see that it's actually a credit balance as per the bank statements under the bank reconciliation statements. Can you see the opening on the credit side of 14,117?
Yes.
Well, let's look at the outstanding checks. We had 228,162, which it was fine. 120,153 was fine. And then the check number 899 of 58 rands. You remember the bank charges. And then we are going to have the bank unfavorable bank balance as per the bank account. We've got an amount of 13,993. And then we've got the credit outstanding deposit of 253. Jessica, do you still remember 253? We did well on this. Okay, let me go back up. I think we're all going to see that.
Outstanding deposit.
I'll show you that. You remember this? Dorothy Mashela, 29. Remember when you compared this figure, it wasn't in the bank statement. Let's go up in the bank statement in the CRA part. So we don't have 253 here. Can you all see that?
Yes, we don't.
Basically, the reason why our bank reconciliation is not balancing is because of that figure. It is. Right. And it matches whatever that is actually missing in there. But the nice part about, let's look at the unfavorable bank balance, 13,997. But we took it directly from the bank account. You remember this?
Yes.
Our balance carried out. You all remember this?
Yes.
Everybody happy?
Yes.
Okay. All right. Who doesn't understand this part of the bank reconciliation statements? Who need clarity with? Who need help with?
So
everybody is happy.
Mr. Putti, so if we have the balance on the debit side of the bank account, that means it's unfavorable.
That it is unfavorable. Yes.
Debit side.
Okay, let's go to the bank statement. We're talking about the bank statement here, right? Are you referring to the bank statement?
No, I'm referring to, so when you did the bank account, our balance brought down the 13,997 that is there. On our recon, we have it as an unfavorable balance. So what I'm asking is the amount in the bank account that's on the debit side. So I know that when it says, it's unfavorable in the bank statement, when we have a debit side. So in the bank account, the same thing is applicable.
Yes. If it's unfavorable, it's going to be on the credit side. It means it's a minus.
All right.
Yes. Happy? Okay, Mpo, are you comfortable?
So far, so good.
So far, so good. Okay. I hope I was just a bit slower this time around.
Yes.
Okay, no problem. Okay, I'm gonna bring you up to speed with the theory on topic D, which is the current and the non-current liabilities, and then we're gonna do a question based on the trade and other receivables and trade and other payables control account. Okay, so let's see that quickly, because I think we left it about 54 minutes. So let's give it time. I'm gonna start with the trade and other payables control account, because the trade and other receivables is just a revision. We did that previously. Right. Topic D says the accountability for current and non-current liabilities, and that's learning unit 30 for the current liabilities. It is defined as a claim which a party and the owner has an asset on of the entity which originates from the past events because of the legal actions. It may also be expected that the payment of a liability will lead to an outflow of resources out of the firm. So liability can be classified as a current and non-current liabilities depending on the period of the payment. If it is payable within 12 months period, it will fall under the current liability. And if the payments agreed is more than 12 months period, it will fall under the non-current liabilities. Okay. So we've got the items that are going to be classified as the current liabilities. The trade payables, these ones we pay them in 12 months period. Accrued expenses and the income received in advance. Installment payable on long-term loan, we call them short-term portions. And then we've got VATs towards SARS, that's on VAT output. And then we've got the bank overdraft. So these are the list of those current liabilities that we're going to deal with in this continent. Right, the major one is the trade payables, because even if you put the rest under the trade payables and just add the amount, it's fine. We don't really have a problem on that one. So this results from the goods and services purchased on credit. You remember when we were doing the purchases journal before, that are purchased on credit, they are actually going to, the initiation stage will be the purchases journal, and the second stage will be the cash journals. And that, sorry, it will be the ledger accounts, and then you do your financial statements. And the last of the list is where you actually make motivation sentence, the notes. All right, so this may result in a discount to be received should the payment be done in a agreed specified date, which is deducted from the purchases. So for example, let's say you purchase goods on credit and they send you a letter, your suppliers are sending you a letter to say that within 30 days, if you can pay so much, you qualify, automatically qualify for the discount of 5% on this one. Okay. So going down there with a little bit of an example, it says that Putin Limited purchased the merchandise from Belgian Trading with an amount of 1,000 rand August 2021. And Putin Limited made a full payment after he was wanted a discount of 15%. All right, let's look at how the required says that part of the ledger accounts. So we just have to do the ledger accounts. Trade payables control account, build it trading. So you debit bank, and then you debit the settlement discount received 150 rands, and then you are going to credit what's called the purchases. So if you look at this, the bank amount of 850 and the settlement discount received of 150 rands, they match the purchases amount of 15,000 rand. Okay, the big issue is, where does this 150 come from? So if you take 1,000 multiply by 15% or minus 15%, it would give you the settlement discount that we have received with an amount of 150 rands. All right, so let's look at the recording of the settlement discount receipt. It sounds like I'm interrupting somebody. Okay, so the settlement discount received, you've got a purchases, that's your contra allocation account, 150. And then what are we actually crediting? The trade payables control account with an amount of 150. Remember, we actually made a payment of 15% discount. What was it for? It was for the credit purchase. So we've decided that we are actually going to settle that account here. Okay. So you need to remember that the settlement discount received is deducted from the purchases in determining the cost of purchases. So let's look at sundries in the current liabilities. It's quite a number of liabilities to be mentioned. However, let's refer to the introduction part. Disclosures in the statement of financial position. All the liabilities that are within 12 months period are recorded in the statement of financial position as current. So it may be trade and other payables account, bank overdraft, output VAT, the income received in advance, or the accrued expenses, and all of those. When you do the statement of financial position, you're going to create a line item called current liabilities, and then you're going to put all of those components under that line item of the trade and other payables control account. However, so this is how, this is how things goes. I think tomorrow, when we do the entire components of the set of the financial statements, this will be covered, definitely. This part will be covered. Okay, so the example, another one, it says that the following balances were taken from the post-adjustment trial balance of Fuji Limited as at 31st December 2001. So you've got the VAT control account of 2,200 Rand. We've got the interest on loan with an amount of 800 Rand. We've got trade payables with an amount of 20,000. We've got an income received in advance with an amount of 15,000 Rand. And then we've got a bank overdraft of 22,650. Required, disclose the above transaction in the statement of financial position. Basically, they're looking for you to do the balance sheet. Okay, so this is what you are going to do. Statement of financial position. I'm not going to give you the heading there. So what you're going to do is say current liability. Okay. And then you're going to say trade another receivables. And you're going to have your income received in advance. Income received in advance. And you're going to have your bank overdraft. And then you're going to, let me just go back for that and see. Okay, that control account and then accrued interest and loan. That control account, and you're going to have what's called the accrued interest and loan. Okay, trade and other receivables, you have 20,000. Sorry. In the income received in advance, we've got 15,000. Pardon, bank overdraft.
I'm sorry, Puti.
Yes.
Oh, you're saying on the current liabilities, why is it the trade and other receivables? Isn't it the payables?
Trade and other payables, yeah.
I just like on how smart you guys are. And thank you for helping me out. Trade and other payables, you are correct. Okay, and we've got the bank overdraft. It's not mentioned incorrectly, right? 22,650. 22,650. And then we've got the VAT control account is 2,200. Oh. 2,200. Okay, and then the interest on loan. So you can just examine this one, right? Not a liability. Okay. You add them together now and then get the total. How much are you getting from the total? 20,000. Okay, let's all have our calculator on so that we can get to the same amount.
59,850.
Please give it to me again.
59,850.
59,850. Everybody there, do you all get the same amount? Do you all get the same amount? 59,850. That's what I am getting. But thank you so much, Ed. Plus, so when you do the statement of
59,850.
please come again.
Am I missing something? 20.
You're getting how much?
I'm getting 57870. Am I missing something?
2,200.
Yeah, all right, let's start all over. Trade and other payables, how much do you
have? 20,000.
What income received in advance? How much do you have?
15,000.
Bank overdraft, how much do you have?
2. Okay.
Are you getting somewhere?
Yeah, I think I got my
22650, right? 22650.
Yes,
Control.
I'm still
How much do you get as a total?
I'm getting 57870.
You must still add the
Okay, let me just
2,200 for VAT control.
Did you add the 2,200 for bed control?
Oh, I didn't add it.
I think that's where maybe you're missing it. Yeah.
Yeah, it's difficult to calculate the money you don't have.
Or you didn't have. Okay.
Okay. Okay. Yes. Okay.
You know what?
I'm with you.
That's not the best. That's not the best advice I can give you, because you're going to make a lot of incorrect figures if you're an accountant. So you'd rather calculate that money, even if you don't have, just to keep your job safe.
Okay.
Yeah, please make sure that.
Okay.
So we are all at 59,850. So in a nutshell, okay, what's going to happen is, let me start in this way. What's going to happen is sometimes they're going to give you the incorrect amount that doesn't even fit to be under there. Let me not say incorrect amount. They're going to give you the amount does not coincide with your current liabilities. So what you have to do is you need to know exactly what goes under your current liabilities, because they're just going to trigger you in many ways. I don't know if that makes sense. For example, here they can give you, okay, they give us the accrued interest here. We know that is actually
It's supposed to be accrued expenses. Yes.
Yeah. Or sometimes they will just give you the cost value of an asset. Right? They'll just say equipment, 1 million. You understand? And they say calculate the total amount that goes to under your current liabilities. If you put that amount of money for that one, you're out. The worst part is you guys are faced up with the multiple choice questions. If you don't get it right, then you're completely out.
Nice.
Because you need to get that. And this is how I like this. This is how the smart people are. You're going to get that incorrect figures, and then you're going to find it under the options available for you. So you need to be very careful. At that time, you'd be very sure that, oh, I'm doing the right thing. Not knowing that you are out. Right. So they always say that when you know better, you do better, right? Right, let's look at what the trade and other payables control account entails. It represents all the individual creditors in the creditors ledger, and they must balance equally to their individual creditors account balances when transfers takes place on a daily or monthly basis. It's basically when the transfer takes place on a timely basis. Let's look at the posting procedures. So the individual entries in the purchases journal must be posted to the credit side of the personal creditors account in the trade payables ledger account. So there are two things that you are going to deal with: an individual creditors account and the trade and other payables control account, meaning that collectively you're going to add in each and every individual account, and then you're going to add the amount together, and then you're going to put it there as your opening balance. Right. For example, it's me. It's me. It's more. Okay. It's me. My company, Pucci Limited. I don't want to put it in a data's perspective. Okay, it's me, it's Moti, it's Jessica, it's Mpo, right? We all purchase goods on credit. Okay, so sorry, we all make purchases on credit. So we are all going to have our own individual's account towards the suppliers, towards whoever the suppliers are. All right, and then what's going to happen is, let's say I'm on 1,000 and Moses on 2,000 and Boyd's on 3,000, Jessica's on 3,000. So individually, when they open up an account, then we're going to be treated differently. But when they are going to add all of us together, they're going to be added under our trade payables control account as one consolidated figure. So however, what's going to determine that, it depends on who is actually paying how much. Who is actually paying better than who? You understand? Then we're going to treat that differently as and time goes by. So, but we'll see that when we cross the bridge in regards to the trade and other payables control account ledger. Right, so it further says that, okay, let me start all over. Individual entries in the purchases journal must be posted to the credit side of the personal creditors account in the trade payables ledger account, while the returns must be recorded on the personal debit side of the personal accounts of the creditors in the creditors ledger. The day the transaction takes place, and individual entries in the cash payments journal must be debited in the trade payables ledger on the same day the transaction took place. This is what happens. We all know that the trade and other payables control account is a liability. And by principle, in terms of the accounting equations, we know that the liabilities increases on the credit side and the decrease on the debit side. Initially, when the liability takes place, we're going to have all the figures on the credit side. Let's say the purchases has been made up on credit. So upon the purchases when they made on credit, we found out or we realized that there's a difference on the goods that we have purchased on credit. And what do? We take them back and say, no, we're not happy because of 1, 2, 3 in regards to the effects of the goods that we have purchased from you on credit. So what we're going to do is we take them back. Obviously, it's going to deduct. Let's say when we purchase the goods it totaled an amount of 20,000 Rand in total. And then I decided to return some of the goods due to the difference on that one. So let's say they were 5,000 Rand. So the 20,000 Rand that occurred initially is going to be deducted, or it's going to be reduced by 5,000 Rand, meaning that the total balance under your trade and other payables control account, it's now going to be 15,000 Rand. It's no longer going to be 20,000 Rand. All right, so this is how it's going to take place. How it's going to occur. Initially, we've got 20,000 Rand. Where does it go? Credit. Okay, opening balance. It's Pooty, it's Mpo, it's Moti, it's Jessica. Our own different balances have been consolidated. They formed one, and then they are put it as balance brought down under the trade and other payables control account on the credit side. Me, as one of their clients, I've returned some of my goods worth 5,000 Rand. And then how do you reduce that? You move that towards the debit side. So what you're going to say, goods returns or purchases returns on the debit side. So that, remember, if 5,000 is on the debit side and 20,000 Rand is actually on the credit side, it means that automatically that tells you that we are left with 15,000 Rand. Right. Moving further afield here, it says the total credit column, total creditors control column in the purchases journal must be posted to the credit side of the trade payables control account. Exactly what I just explained now. While the returns must be posted to the debit side of the trade payables control account, and the total of the creditors control account in the cash payment must be posted to the debit side of the trade payables control account. This is when we are done with each and every individual creditors account. So entries that are made in the general journal that affect the creditors must be posted to personal accounts of the creditors daily and the creditors total column on a monthly basis to their control accounts. Should an error occur when balancing the ledger and subsidiaries, the reason for any error must be identified and adjusted to the account or by the accountant, and the following error could occur. Posting towards the debit side instead of the credit side, highly possible. That could be one of the errors that could happen. Transpositions of figures. For example, you initially you recorded 210 instead of 120. Remember that could happen in or under your bank reconciliation statements as well. So incorrect balancing or totaling or listing, and the error is posting entries in the journal to be posted to the ledger accounts. So that's how the error may occur. Be careful of that. But the last unit is non-current liabilities. So the most common current liabilities that we are using here is the long-term loan or the debentures, but they do like the long-term loan. Right? What is the long-term loan? It's a loan that is defined to be payable in more than 12 months period. So those kind of loans are when you purchase a motor car with credit. So it's not easy to pay that in a year, or when you purchase a bond. So the kind of a high purchase, usually we know it's 20 years plus in South Africa or across the world. or the purchases of an aeroplane, the aircraft, and all those kind of big assets. So when you purchase them on credit, that would form you to be under the non-current liability as a long-term loan. Right. Remember, when we dealt with the current liabilities there, we dealt with an item, a concept called the short-term loans. How does it work? Short-term loans, usually when you get a long-term loan and they say you paid your installment twice in a year, for example, let's say you're taking it in January, everything has been approved. They tell you the 30th of June is your first installment, or the 31st of December is actually the first installment. So they say we give you 2 million of 12% on a biannual payment basis. So what's going to happen is you are going to say, if you're paying that in 6 months, you will say 2 million multiplied by 12% multiplied by 6 divided by 12. So whatever the difference that you are actually getting is called a short-term portion, meaning that the amount that you are getting, let's assume that out of the 2 million short-term portion, you actually paid, let's say roughly 120,000 rands. What you're going to do is you will say in the current year, 120,000 rand is going to fall under my short-term portion. Automatically that will fall under your current liabilities. So the difference would fall within the next financial period. That will be your long-term liability in 2023, not in the current year, because the current year you've paid your biannual payments already. So that 6 month payment portion has been deducted. So it's called the short-term portion, meaning that you're going to move it under your current liabilities. But be careful of the year. Be careful of which year are you dealing with, and for how long is that going to be paid. In the current year, is it biannual? Is it monthly? Is it quarterly? Or is it on an annual basis? So you need to be very careful of those things, and you need to compare the number of years. Is it 2022? Is it 2023? And which one is actually the current years? Right, so that's what I'm trying to explain in here. Recording of non-current liabilities in the books and its disclosure in the financial statements. So the long-term loan and the mortgages is actually what I've just explained to you now. For every installment payable in the next financial period must be disclosed as a current liabilities, as short-term provision or short-term payments on the long-term loan in the statement of financial position in the current year. I've got an assignment for you. When you get home, please make sure that, because I'm going to give you a question based on this one tomorrow. We are definitely going to have the statement of financial position that include the short-term portion and the long-term portions. I need you to identify something that is actually very important. Why do we have to split it apart to have the short-term portion and the long-term portion? Despite the reason that that has been paid in the current year for whatever the biannual payment or quarterly payments and stuff like that. But there should be a reason as to why you're actually doing that. Okay, before I move further here, anybody with a question? Anyone with a question? People are gone.
No, we here.
Oh, you here?
I'm just trying to think because this is the tough part. Yeah.
No, don't worry. Tomorrow it's going to be it's going to be way much easier for you. Believe me, it's going to be way much more easier because you're going to do it at a practical level. I've got a question for you here in regards to the trade and other receivables and trade payables control account. But I'd like us to actually start with the trade and other payables control account, so that if we run out of time, then I would be able to, or you would be able to know that we are covered for the payables because we did the receivables. Let me just show you this question. I'm going to go through these questions with you, and then I'm going to use two different highlighters. The one that falls under the trade and other payables control account, I'm going to use the blue color, and the one that is falling under the trade and other receivables control account, I'm going to use a different color altogether. So what I'm going to do is I'm going to read them through with you. And then what's going to happen is you tell me as to whether it will fall under the trade and other receivables or the trade payables control account. Let me check it quickly. All right, the question says that it is relating to the trade receivables control account, and the following transaction relates to the account transactions of Putin Limited for the December 2022. Okay. Number one says that we've got an opening balance of the trade and other receivables control account with an amount of 65,000 rand. So that's a trade debtors control account. I think I made a mistake for the typing error. Trade debtors control account. Right, so initially we've been told that that goes under your trade and other trade debtors control account, and we've got a settlement discount granted. Okay, I think, oh, they already mentioned. So that's a trade debtor account, and then we've got a credit sales of 45,000 rand. So that's your trade and other receivables control account, and then we've got the purchases returns amount with an amount of 1,230. That's trade payables controls account. And then we've got a returns under the sales with an amount of 1,200. That's a trade debtors control account. We've got a bank that says that the returned check. Can you see that these they're going hand in hand or together with the bank reconciliation statements? That's with an amount of 200 rands. And then we've got credit purchases, 55,320. That's a trade payables control account. So you've got a cash purchase with an amount of 20,000 rand, which is a bank account, with a settlement discount received with an amount of 250. That's a trade payables control account. So you've got a total here. It says that the total trade payables control account, which is a bank account. We've got a bank total trade receivables receivable control account. Let's have a look at our additional information, which says the purchases journal was undercosted by an amount of 319. It's an increase in the purchases journal, while the sales journal was overcosted by an amount of 400 rand. That's a decrease in the trade and other payables control, receivables control account. Got an interest charge in overdue accounts with an amount of 230. And the third bulletin says that we've got the total of the trade receivables balances per the list. As per the list of the trade receivables amount of 17,150, specific list of debtors. This actually happens when you do every call. Okay, and we've got an amount of 113, which has been written off as a credit losses, and it has erroneously been added to the credit sales of 45,000 rand, and this error has been posted correctly to the applicable account in the trade receivables ledger account. Trade debtors. Got a trade sales of 120 that was posted correctly to the sales account, and the trade receivables control account. And the trade receivables control account in the general ledger, but was not posted to the specific data in the trade receivables ledger account, specific data accounts. Credit note 665.35 rand was recorded correctly in the sales returns journal, but posted to the incorrectly posted basically, or rather posted incorrectly to the side of the personal account of the data in the trade receivable ledger. So third last one says an account with an amount of 15065 from credit sales was received from PP Solutions the cost of the freight must still be accounted for in the records of equity management. The check of 200 Rand was the check of a data in payment of his account, and the check was returned due to insufficient funds. So that's a trade data account. The opening balance of the trade and other payables control account at the beginning was with an amount of 25350. But the required part says that prepare the correct and properly balance the trade receivables and trade payables control accounts for putting them at the 31st of December 2022. So you have to reconcile the total list of the trade receivable balances. Okay. So let's have a look at how the trade and other payables control account has been treated. What we had the opening balance, which is the balance brought down with an amount of 25,350. Let's have a look at 25,250. Can you all see that? The opening balance of the trade and other payables control account at the beginning, 25,350. Can you all see that?
Yes, we can.
Yes.
Okay, do you agree that it has to go through to the credit side?
Why? Please explain why. I was just about to ask that. How do we know it goes to the credit side?
All right, thank you very much for that. The reason why it's actually on the credit side is because, remember, the trade and other payables control account, it's a trade creditor, it's a liability. So the liabilities increases on the credit side. That's why you see this figure on the credit side.
But this is on the debit side. If liabilities increase on the credit side, is that not the wrong side? Where are we? Trade and other receivables. Oh. Where's the other one?
Okay, I think I didn't get you there. What did you say?
Sorry, I'm looking at the wrong account. We're looking at trade receivables, so I was confused there for a second.
Oh, the trade receivable is a data. It should go through to the debit side. The opening should go through to the debit side. So do you agree with that?
Yes, that it increases on the credit side. Yes.
Okay, we've got the purchases returns with an amount of 1230. Let's go to it. It's actually on the debit side, but let's have a look at what the additional information says. 1230. Let's look at under this trial balance items. Let's look at number 4. It says purchases returns 1,230. Can you all see that?
Yes.
Okay, it is on the debit side. Can somebody tell me why is it on the debit side?
Because it's in our stock or something is increasing because the goods came back.
Because the goods came back, so it actually decreases our opening balance.
Yeah.
Okay. So when the liabilities goes down, they do decrease on the debit side. That's as per the principles. Make sense?
Makes sense.
Right, we've got a discount that was granted with an amount of 250. Okay, let's go through to the additional information or the trial balance and look at where the 250 is. Okay, let's see, 250. Can you see number 9?
Able.
Settlements discount received.
250, okay.
The goods were sold in credit and we are receiving the payment earlier than we thought. Obviously, we are going to actually receive the discount. But let's look at the next line item. Right, we've got an undercast of 319. Let's see where 319 is. I think I've seen it on the additional purchases. Okay. Look at bulletin number 1. It says purchases journal was undercasted with an amount of 319. So there's an increase in the purchases journal because we need to add more as it was actually undercasted. That's why you see it on the credit side. Can you see that?
So then undercast must increase.
It was undercasted. So if it was overcasted, it means that we had to reduce it. So it was going to come to the debit side with the same amount. And we would say overcasted.
Increase trade payable. Okay.
Make sense?
Yes.
All right. So under the information that I just gave you now, is there any other information that you think it is actually missing in here? Do you think there's a figure that has to be added or deducted under the trade and other payables control account?
I think I will need to have to look at those additional information again.
Okay, no, it's fine. There I can, if you request an email, I can send you that. I don't have a problem. I can do that for you. All right, my total credit figure gave me, it's 25,350 plus 319, which is 25,669. And then you're going to minus 1230 and 250. So the carrying amount here, I put the X amount because I didn't get the final figure, but let me get it for you now. 25,350 plus 319. So it's 25,669. The total balance is actually quite correct. Then you would say minus 1230. And you minus 250. So it's 24,189.
Yep.
Are you getting 24,189?
I am.
Okay, 24,189. That's your balance carried down. And because the liability has power on the credit side, these would be the opening balance for next year. Okay, so you'd say balance carried down. The amount is 241,89. Just like this.
Okay.
So that means it's going to be the opening balance for the next period or the next accounting cycle. Before I move on to trade receivables control account, any questions? Any questions?
Not from my side.
Not from your side. Okay, let's look at the trade and other receivables control accounts. The balance brought down is on the debit side. Anybody who can tell me why is it on the debit side?
Because it's an asset.
Because it's an asset increase on the debit side, right? Let's have a look at the information as to where does this figure come from. So is it 65,000 or 45,000? Okay, 65,000. But let's have a look at it.
Oh, it's incorrect.
It's supposed to be 45,000. Can you see that? I think I made a mistake there.
But the opening balance of trade and other receivables control account is 65,000.
Let me see.
So there in red, you said it is 65,000.
I said, no, that's what I'm saying, that I take the fall for it because I don't have that figure. It means I took the wrong amount in here. But here it is. Wait. There's something here. An amount of 113, which has been written off as credit losses, and it has erroneously been added to the trade sales amount of 45,000, right? And this error has been posted correctly to the applicable. Basically, it's not supposed to be 65, it's supposed to be 45, right?
Okay, yes.
Yeah, it's supposed to be 45. So you have to take it from up. I think it was the punching error on figures. Right, discount granted 350. Let's have a look at it. 350. Can you see it on top here? Note number 2.
Yes.
I think I made a mistake here. Opening balance on the trade and other receivables control account is 65.
Yes, that's what I said.
Made a mistake. Sorry. So initially I was correct. We're looking for the discount is 350. Look at it. Okay, so that's going to reduce the balance product down of 65 to 350. Do you all get that? The discount?
Yes.
Or the returns. Remember, the purchase of returns was actually on the debit side. This time around, because we're dealing with an asset, it is on the credit side with an amount of 1,200 rand. Everybody happy with this?
Yes.
Okay, let's look at the returns. Can you see 1,200 trade debtors? It's a return. Alrighty, this owner check. So this person has been trying to pay us, only to find out that he doesn't have enough funds in his bank account. So that means that his debtors account is still going to grow. It's not going to change. That's why you see it on the debit side with an amount of 200.
So even if the check bounces, it still increases our asset.
No, it actually doesn't increase. Let me tell you why. The initial part, it will be like, it is actually included in here, right? So they're trying to actually make us payment. They're trying to make the payment. So remember, when they make a payment, it should come this side because it's decreasing, right? So if that was not a dishonored payment, 200 rand was going to come this side, but they haven't made any payment, right? So the assumption would be it was actually on this side, reducing this, but it has to come back to this side.
Okay.
All right. So let's move on to the credit losses with an amount of 113 there. So I bought goods at Woolworth store with an account, and then it happens that I'm failing to make the payments. And what happened is the company write me off as a debtor or as a credit loss of the bad debt. So when we cancel you, it means that we have to minus you. By minusing you, we have to put you on the credit side. That's why you see the credit loss of 113 on the credit side, because we're no longer expecting that amount of money. We are writing it off. Let's see where it is. The amount of 113, we just been written off as a credit losses. It has been erroneously being added to the credit sales amount with an amount of 45,000 rand, and this error has been posted to the applicable accounting trade receivables control account. Okay. So we had 45,000 rand in the 65,000 rand. That's fine. All right. There is an account statement. They sent us the statement with an amount of 15065. That was just a reminder. It's not actually that amount. Sorry. It's not that we have paid that amount of money, but it was treated as a reminder that we still owe these people their amount of 15,065. All right, so it says that an account of 15065 in credit sale was received from PP Solution, and the cost of the flight must still be accounted for in the goods record PT Limited. Yes, so we got a statement that you are my debtor, and this is how much you owe me, so you haven't paid us. So let me see. So that has been treated as 15065 on the credit side. So basically, you would see you will actually balance up the figures with an amount of 65,000 and 65,000, and get the carried down with the difference. Right, so I'm gonna have to redo this. Sorry, I'm gonna have to give you clarity with regards to this tomorrow, just this part. Okay, but in the meantime, I just want to check it as to how much is my carried balance. The 65,000 minus 350.
It's 48,272.
It's
272.
48. Thank you, Jessica. 48,270. Okay, there's two things that I have to look at for you tomorrow, which is this. Just before I start with the VAT and the financial statements components with the side of it, then I'll just actually get this because I still feel like I owe you more explanation on this one. All right, before I close off, is there anything else that you would like me to explain or clarify? Let me just bring you up to speed.
So the credit losses that was mentioned there in the notes, it has nothing to do, we don't show it in the trade and other receivables account.
Isn't it this one of 113?
Oh, okay. There we go.
Okay.
Puti, can I ask a question? What is the difference between 1501 and 1502?
Because I know with accounting modules, there are certain things that you do at certain modules, and there are certain things you don't do at certain modules.